Polygon Global Investments has launched 3 new cryptocurrency funds charging just a third of the management fees of their exchange-traded equivalents. What are retail funds? How will this new venture help crypto investors? Stay tuned to find out all the important unanswered questions we need answered about the 3 new retail funds that will undercut the crypto ETF market. First up, what is a retail fund? A retail fund is an investment fund where the majority of the capital is contributed by private investors. Common retail fund types aimed at average investors include mutual funds and exchange-traded funds, or ETFs. These may be contrasted with institutional funds that target larger dollar amounts from professional investors or investment firms such as pensions or insurance companies. Individual investments' interests are the focus of retail funds. The 2 most popular types of retail funds are closed-end mutual funds and exchange-traded funds. Through a variety of share classes, open-end mutual funds manage investments from institutional and retail investors together. An open-end mutual fund's majority of share classes are intended for individual retail investors. Retail funds do not have specific investor requirements. In that way, they differ from other fund offerings in the market that mandate certain investor requirements. Hedge funds and private market investments, for example, may require that an investor be accredited with a specified net worth. Next up, what are ETFs? Exchange-traded funds are one of the most important and valuable products created for individual investors in recent years. ETFs offer many benefits and, if used wisely, are an excellent vehicle to achieve an investor's investment goals. In a nutshell, an ETF is a collection of securities that you can buy or sell on a stock exchange through a brokerage company. Almost every asset class imaginable, including traditional investments and so-called alternative assets like commodities or currencies, is available as an ETF. Innovative ETF structures also give investors access to leverage, market shorting, and tax-free short-term capital gains. In 2022, ETFs are estimated at $6.64 trillion, with nearly 3,000 ETF products traded on U.S. stock exchanges. When the stock exchanges are open during the day, an ETF can be bought and sold just like a stock in a company. An ETF has a ticker symbol, just like a stock, and intraday price data can be easily accessed throughout the trading day. Innovation has been the hallmark of the ETF industry since its beginning more than 29 years ago. Undoubtedly, there will be new and more unusual ETFs introduced in the years to come. Next up, what are the details about the retail funds that will undercut crypto ETF? 3 new cryptocurrency funds from Polygon Global Investments are now available to retail investors and have management fees that are only a third of those of their much-hyped exchange-traded equivalents. The homegrown venture capital and funds management firm, which specializes in Web3 technology investments, has obtained a financial services license from the corporate regulator, allowing it to run managed investment schemes for regular retail investors. By introducing 3 distinct unlisted funds to the market, it has given investors passive exposure to the spot prices of Bitcoin, Ethereum, and Filecoin. According to current information, the Polygon Filecoin Fund is the first retail managed fund in Australia invested in a cryptocurrency asset other than Bitcoin and Ethereum, the 2 largest tokens by market capitalization. Each will levy a 0.4% annual management fee, or 40 basis points, which is 67% less than the 1.25% fee levied by the initial group of Australian cryptocurrency exchange-traded funds. Additionally, fund expenses are restricted to 0.4% annually. We don't think we're adding an enormous amount of value here, and so we shouldn't be charging an enormous fee. Polygon head of asset management Rory Scott told the Australian Financial Review, "We've looked at every part of the value chain and worked out whether we think there's value in the fee being charged to us as a product provider, and whether there might be a smarter way to do that." Next up, how do they have a connection with NASA? Managers ETF Securities and Cosmos Asset Management listed funds with Bitcoin and Ethereum holdings on the Cboe Australia exchange in May. According to Morningstar data, they were the priciest non-leveraged passively managed ETFs available on the Australian market. ETF Securities, which has been bought by Korean wealth giant Mirai, and Cosmos said at the time the relatively high fees were a function of crypto-specific complexities, such as the need to store and safeguard the digital assets. Polygon Group CEO Heath Benke claimed that his company's connections with cryptocurrency service providers allow it to be complete with the local market's economics. Some cryptocurrency infrastructure providers are coming into the mainstream and charging outrageous prices, clipping the ticket everywhere, Mr. Benke said. You have to be quite vigilant. The Sydney-based company Polygon claims that its role as a Filecoin network custodian and data storage provider has allowed it to serve organizations like NASA and Switzerland's CERN, in addition to investing in early-stage crypto and Web3 ventures. The process to gain approvals from the Australian Securities and Investment Commission took about 12 months to complete, Mr. Benke said, a period over which cryptocurrency markets have crashed spectacularly. Next up, what made some investors gun-shy? Mr. Scott claimed that some retail investors and financial advisors had become gun-shy as a result of the market decline. However, according to Polygon, there is still a sizable group of investors looking to enter the market using a managed fund or other traditional, regulated format. According to a survey conducted by ETF manager BetaShares last year, nearly 90% of financial advisors say they have been contacted by clients asking about investing in cryptocurrencies. The company will target these advisors. The 3 retail funds in which investors can also apply to buy units through the Holon website are currently being discussed for distribution with advisor-facing wealth platforms. People can see that laws and regulations are being introduced, Mr. Binky added. We've had our lawmakers recognize there is utility and that we need to put in place clear laws and regulations. We can see those foundations firming, and the more that this is brought into the regulatory sphere, the vastly better it is for the development of the asset class. The Albanese government has vowed to regulate crypto trading platforms, while the Reserve Bank of Australia has called for so-called stablecoins pegged to fiat currencies to be treated like bank deposits. So when will the crypto winter end? 2022 will be one of the worst years for crypto, but all hope is not lost. The recent rise in crypto in mid-July, coupled with other positive economic indicators that could indicate a slow turning of the bear market, could indicate a crypto recovery on the horizon, and it may happen faster than many believed would occur. An unexpected boost in retail spending in June 2022, along with the Federal Reserve projecting an interest rate hike of just 0.75% rather than a full point at the next meeting, bode well for the economy. And since the crypto crash is related to these kinds of macroeconomic factors, crypto could be in the early stages of recovering already. Observers, particularly Michael Burry of the Big Shot fame, say the market will soon enter a bull market. While Bitcoin's decline has been epic, it may be a matter of months before the next bull market begins. Bitcoin is the closest thing the world has to a global currency. Perplexingly, it is also the ultimate risk asset right now. Therefore, despite its long-term potential, Bitcoin will continue facing challenges through the tightening monetary phase. Bitcoin has gotten hammered in recent months, and while it may be time for a near-term rally, the ultimate low could come at around $10,000. Nevertheless, I wouldn't bet against Bitcoin for too long. The next bull market should propel Bitcoin significantly above $70,000. Finally, is the Bitcoin ETF feature fee war heating up? The race is on to cut costs in the U.S. Bitcoin futures exchange traded funds just a day after the first ETF launched. VanEck's pending Bitcoin strategy ETF, ticker XBTF, will carry a management fee of 0.65%, meaning $6.50 for every $1,000 invested. That would undercut the 0.95% expense ratio carried by the ProShares Bitcoin strategy ETF, ticker BITO, which debuted on Tuesday. According to the company's updated prospectus, the VanEck fund went into effect on October 23rd. After that, according to VanEck spokesman, the company plans to launch it as soon as practically possible. Investors are looking for the cheapest way they can obtain exposure to Bitcoin, said Mohit Bajaj, director of ETFs at Walash Beth Capital, especially if the instruments they are choosing between are correlated. Investors around the globe are looking for crypto funds that offer the lowest possible management fees, and Holon Global Investments could provide just that, giving customers better options and their competitors more competition. What do you think about these crypto funds? What do you think will be the value of cryptos in the near future? Make sure to let us know your thoughts down below. Thanks for watching.